Hello, welcome to another live stream with me, Christian Rauchenwald, and with that to another episode of Daily Market Mastery. Now, as always, before we jump into things, let's get the usual disclaimer out of the way, and that is, as mentioned below, everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. With that out of the way, we can jump straight into it. Now, first things first, we're going to start with our currently favorite stock, I would have to say GameStop. So while I on Tuesday mistakenly thought that wave one finished here and we already expected it to go up, only to then later in the day or actually early in the morning the next day notice this pattern down here that made me realize this is wave one, here we have wave two, and now we should be in a third wave movement up. And within that third wave movement up, we also finished already 1, 2, 3, 4, 5. So a small wave 1, A, B, C, a small wave 2. And then we can also check it hit the, wrong, that point goes here, that point goes here, that point goes here. We can see that we nicely hit the minimum target for a wave C of 21.80. We actually went down to exactly 21.80. And now we have an upwards movement here, which should be a wave 3, which brings us to an interesting situation, because first of all, if this is wave 1, this is wave 2, then we should be set in wave 3. Wave 3 is usually the strongest movement. And the next profit target for that wave 3 movement would be between 31 and 34. Obviously, not necessarily within a day. The more likely profit target, actually, based on my experience, is the 2618 extension. That would be 51.72. So however, that's not going to happen in a day. So those patterns take time to play out as we learn. Guesstimating the time it takes is actually the hardest part, but that's where we are right now. Now, we don't need this anymore, although here also, like I think we mentioned it yesterday in the stream, that potentially we will turn around on the 20.02 expansion here, which would be, again, in this case, the perfect target for a wave C, where wave A and wave C are in quotes identical in terms of distance, but we don't need that anymore. Now, if this here is our new wave 1, so the small wave 1, and that's the wave 2, we can apply an extension here, and we get the profit targets. I'm going to remove the other one for now, of at least 24.47, but potentially, as said, in my opinion, the 2618 is the more likely scenario, 27.64. Now, one thing to point out here is that, or as a reminder, is that obviously we're not dealing with certainties, which means like everything that we're covering here, we're just dealing with probabilities, and obviously it's just all my opinion. But in my opinion, we stand to see a strong movement potentially today, because we finished this wave 1, 2 from the looks of it, which means here we have a very small wave 1, 2, 3, 4, 5. Small correction, move up, which means we should theoretically today go above at least 34, which brings us to a very, very interesting thing we can do, or let's circle back for a second, at least above 34, maybe even, like question is how high do we go? So that would be the minimum, that would be the maximum. So let's say 25 is something that's within the grasps today, which brings us to a very, very, very cool tool that OptionStrat offers. It's free to use. No link for it in the description yet, but if you look for OptionStrat, you will find it. There you can go to optimize, select GameStop, and then we can say, okay, today's expiration, we expect it to reach at least 25. And I'd like to make a play that costs me at most $100. Now, it automatically looks at the option chain. We'll have to do that in 7 minutes again when the prices are updated, because right now it's seeing the prices from yesterday evening, and it's possible that that play might not be valid anymore. We'll see in 7 minutes. But if it is still valid, then we can just adjust that slider here between max chance and max return, and could then, for example, say, okay, we buy a so-called bull call spread by buying a call at 24 and selling one at 25. And the result of that would be, and then we can open it in the builder to look at it better. The result of that would look like this in the end. So if we are above 24.16 when the market closed, we make an $84.50 profit for a total risk of $15.50. So like we see here, our risk, here it says $18 risk and 82 profit. But again, it's still using stale prices from yesterday market close, so we'll see how that updates when the markets are actually open. That may or may not be actually worth for me to subscribe to option strat, because on the free plan we're working with a 15-minute delay on the prices. Still, however, should still be fine. If we look at the table, we can see that throughout the day, considering what's the latest volatility was 197%. Let's update that here. So 197 or 79, 97, 97. Yes. So considering the latest volatility that we had from yesterday evening, 197%, we would see that basically, do we make that smaller? No, we make that bigger. Yeah. So, or no, actually, let's make it like this. So the overall profit here would be 84. So let's see, 84. In this case, I want to zoom in a way where I have the 84 already in the first gap visible to know what we would need to reach. So if the market opens and would immediately rally up, it would need to rally to $28 in order for us to be able to close that option initially. However, throughout the day, we can see that, for example, if we touch the $25 mark, so while we are saying we think it will reach 25. If we touch the $25 mark, we don't necessarily have to hold the option, but we, depending on the time, can already close it, so buy it back for 60 to 90% of the profit almost, yeah. So we don't have to hold it to the end. But at the end of the day, if those quotes are still roughly similar, once the market opens, we get into a very, very interesting situation, because we'll have a set for $18, or we will have a trade with a potential 456% return. Now, obviously, if as we see here, if we don't at least go above 23.50 in the first couple of hours, I mean, it doesn't matter. So let's put it like this. So for those of you that are like completely new to option trading, what matters for the option is how it ends. But if we want to sell it early or close it early and secure our profit, it matters what happens on the way. So it could theoretically the price could drop to 20, and as long as then in the end it goes up above the 24.16 where we're in profit, everything is fine. However, obviously we would prefer for it to already move in the direction we want, so we can ideally get out of the trade early and secure 2/3 or more of the profit already. So usually I close my, or try to buy back my options with a 2/3 profit. But yeah, so we'll see in 3 minutes how the premiums update. I might start a trial, just have to do that on the other screen. Yeah. Let's go here, start a trial. Yep. There we go. Might need to confirm that on my phone. Welcome. Okay, we have to fill out a form. Are you currently... I agree. Okay, next step. I agree. Okay, with that, we actually have our trial running. So we should now have real-time data. Okay, so that will help us in exactly 2 minutes when the market's open, because we will get, so we say, okay, our profit target is 25 and we would like to risk, yeah, like actually could say 120, for example. So 1% of our portfolio on that move, and we go for the maximum return. And yeah, now we're gonna, my microphone covers the time, so it's like 45 seconds to go. We're gonna wait for that to actually potentially make that play as soon as the market opens, because if we are indeed in a third wave then we would expect stronger movement. Yeah, I'm not saying ridiculously ridiculous jumps, but still stronger movements. So we want to secure that trade if possible initially. So for that, we would have to buy the 25 call and sell the 25 call as a 24 call buy and 25 sell. So with the expiration today, so we already have it configured, buy 25, sell 20, buy 24, sell 25. So that's what we are waiting for right now. And now prices are updated. We can look at the profile here. We have a risk of, okay, therefore the trade changed. So we can see that the overall profile changed. It should be 18 risk, 82 profit. So if we sell 5 of those, we should have 100 risk. That's still a little bit more. So although mid price, yeah, mid price would be, mid price is 8 really. So let's check again. Profile 160, 340. Okay, that's not as good as we saw it before. So 25 budget 100. Still the best play, yeah? So buy the 24 call, sell the 25. What does the stock do at market open? Okay, it's a little bit jumpy, so that might explain it. So this way we place basically 13. So yeah, let's say 120 divided by 13, so we can get 9 of those puppies. 9. Okay, now it says it goes 10, so we can get 10 of those puppies. Submit order. Yes. Override. So let's see if they fill. Mid would be 17, but then we would have to change the quantity to 5 or so. And let's say 15. Let's try for 15.
Order partially filled.
Did it fill? Yes. So we have our bull call here. We have 5 pieces of that. And if we look at the performance profile, we have a potential max profit of 75. Now that should be per piece. Oh, it only bought 1. Huh? Okay, it could only fill 1 so far, and we still have those unfilled, and the price is changing. Okay, so let's. It's getting more expensive, which means the stock should be moving up, which it does, yeah, which also fits with our, that might be wave 1, 2, another, or wave 1, 2, and now we're in wave 3. By the way, that small wave 3, if we zoom in a little bit, we get another profit target. So if that potentially would be wave 1 or that here, wave 1, so 1, 2, yeah, that's go lower. So then we see that actually the 2618 is the 23 mark. So that suits with like basically 1, 2, 3, 4. So we bounce a little bit from here, then we get a push to 5. And then we already get in the right direction. So I mean, it can obviously turn out that I'm wrong. Nobody's always right, but I think that's gonna pay. Now we only got 1 of our options. No, we got more now. We got 2 so far out of the 5 that we want. Okay. Performance profile does update or not? Yeah. So, but that's now for 2 options. So it was 75 for 1. So, basically 16. Yeah, now I have to calculate differently. So because we paid with commission 16.3, usually we are selling cash secured puts, which means we're getting a premium and we want to buy it back cheaper. Whereas this time we bought call options, which means we want to sell them, which means we want to sell them. I mean, it varies. Obviously, one of the call options is against us, the other one is for us. So but we create a situation where, because we sell a call and we buy a call, we limit our risk in both directions. So downside risk is only the premium we paid. Upside risk is basically the difference of those two. So now if we want to, how do I calculate that? So like, for what do I sell that? So so that's likely for two of the options. Okay, it says 58 risk, 142. So in order to make 142 profit, I would need to sell for 1.42, or in that case then for, oh no, more. So we obviously would have to, so if we calculate for one, so one should be 75 profit, plus we paid 16.3 for them. So that's what we would want to sell them. So divided by 100 would be for 0.92, let's say. So if I say close, we still have the open orders for buying more. Okay, we cancel that. Yeah, so we said 0.93. We say close that for 0.93, which means, and we can make that good till canceled or today. I mean, it anyway ends today, so good till canceled does it, which means that if the price moves in our favor, we would sell those for 93 each and would actually have the full profit of 75. However, since we, usually, so let's do this again. Usually we settle for 2/3 of the profit. So that would be 49 plus 16.3 that we paid. So divided by 100. So actually 0.66 or 67. So let's say 67. 0.67 is what we would buy them back for. And that would be that. Now I'll just need some time to quickly enter that in Theta Gang. So in the meantime, I need the window in order to do that. So open trade. Yeah, I'm not sure if they have a bull call scenario here. So call credit spread, but we actually have a debit spread, call debit spread. Okay, expiring today. Long call is the one we bought. Short call is the one we sold. This 25. Quantity in that case is 2. So we didn't wait to get more. It was filled for 0.163. Okay, so that should be the right trade. Yeah. So, other than that, we have our, oh, that one's actually doing nice now. We have our June 7 put that we sold for 20 strike price. We got $109 for it, and we already have an order for it here to buy it back for 35. So we'd settle for, as always, 2/3 of the profit. Now, right now, it's still expensive. We could buy it back for 1/3 of the profit today. If we indeed move up, I'm confident, and there we actually are moving up. God, I love Elliott Wave Theory. Potentially considering this move, this might be the third wave, and then we get wave 4 and wave 5. Now, if that turns out like this, so as said, we might today finish above 25, but we're not gonna wait and be greedy for the full profit. We are just, in quotes, not gambling, but betting that the price moves up far enough. So if we look into the builder, that the price moves up far enough to actually secure us our, what did we have as maximum profit? We had as maximum profit 75, and we wanted to basically make 50 profit, so that it moves up far enough or at a specific time is still high enough for us to lock in the 50. And if that's not the case, to at least finish above the, whatever our, what's our break even? It should be slightly below 25. Do we see it? No, we don't. 5% move. So at 24, 26, we're already in profit if we finish like that. So 24, 26, then if we are higher than that, then we actually get more in profit. and only starting from 25, we have the full profit of 142 for our 2 options. So now let's see how that plays out while we look into other things. Yeah, interesting push up here. Again, we touch in this case. It's what I noticed. It doesn't always apply, but what I notice is that basically when we look at the first wave and the second wave, and or like here, first wave, second wave, and we just apply a Fibonacci extension here, very often the third wave will bounce on like one of the 382, 618 extensions. So either the first one, most often the 2618, but sometimes also higher. Yeah. And that's usually where the third wave finishes and turns around. Yeah, it's not always the case. And but it's just what I noticed when the pattern plays out, in quotes by the book, that very often happens, which would provide the idea in general that this might be a sad 1, 2, and then here 1, 2, 3, and now wave 4. Maybe on the 1 minute chart might see it better or not yet. So there we have a little bit. That would need to be potentially A, B, C. Because if that's, zooming out again, if that's here wave 1, 2, then wave 4 can not go lower than this. And technically, if it's an impulse wave here, then it cannot enter this price territory. Now, that's not guaranteed here with the price territory, but if we were to fall below the low here at 22, then the pattern would be invalid. So since we already corrected a lot, I assume that wave 4 is already done, or I mean, like here, A, B, C. So possibly wave 4 is done. And from here, we might go up further in a wave 5, which then would just finish this wave movement here. We get another small drop and get another push up. So there should be enough time for that to play out, hopefully today, or at least play out to the extent that we can sell our GameStop bull call at a profit, as well as selling the maybe potentially selling our June 720 put already, because if we can sell that one, we can sell another, and then I would probably go for June 21st 20 put, because like that's something I thought about today. So for those of you that don't know how selling put options work, it's basically similar than having a limit order, which means instead of having a limit buy order where I say, okay, I'm willing to buy at $20, and if the price touches 20, it instantly buys me the shares. Selling a cash secured put option with a strike price of 20 says, if the option expires below 20 or the buyer exercises it early below 20, I am buying 100 shares at 20. Yeah, with the difference, if I have the limit order here and the price doesn't drop, I didn't make a single penny. I just wasted my time. Whereas if I sell the put option and the price doesn't drop, I still made the premium. And the higher the implied volatility is, the better the premium. So for example, for June 21st, which is 3 weeks away, we'd receive around $240 right now for selling that option. Yeah. Now, however, if I sell the one for next June in 7 days, we receive $85. So in the next 21 days, I could theoretically sell 3 of those. So for next Friday, the Friday after that, and then for the Friday the 21st. And theoretically, so now it's $110. Theoretically, 3 times 110 is obviously more than 1 times 200 something, yeah. So which theoretically makes those weekly options more interesting, because you get theoretically more money. The problem, however, is, yeah, if I assume that the stock moves up, then the premium I get paid for the $20 put becomes less and less, which means I could this week sell it for, or right now sell it for 100 something, which would be great. But next week, I will not get 100 something for this at all. And I would have to sell, for example, maybe the 22 put. But the question then is, if I do my analysis, we zoom out a little bit to see a little bit more, do I think that the stock will definitely stay above 22? Yeah. Because if I don't think that, then the question is, am I willing to even buy it at 22? And the other thing is quantity. So if we would have $10,000 in our account, and we sell a $20 put option, which commits us to buying 100 shares at $20 per share, so $2,000, which means we could sell 5 of those with $10,000 capital. However, if we are forced to sell, if we are forced to, or not forced, but if we end up selling the $22 put option, we would need $2,200 to buy 100 shares each, which means we could only sell 4 of those. So therefore, it's a tough consideration to decide between, okay, selling this one here and hoping that the price moves flat, which has its own downside because it would reduce the implied volatility, which also reduces the price, or just selling a longer dated one. For example, if I believe that GameStop never ever again would go below 20, I could sell the January 26, 20 put option and actually receive $925 for that. Although it seems like those $925 would be for 2 years, we can actually, their option strat is really cool. If we take the January 26 and actually build cash secured put and say the $20 put option, and we can see on the spreadsheet here, do we want to? Yeah, if I move it further. Okay, then we can see on the spreadsheet here that depending on if we were right now to sell that specific put option, depending on how GameStop moves, on one hand, we would obviously get a set $910 premium, and we could obviously sell it early or buy it back early, and we would see if, for example, in June we reach $50, we could already sell it and or buy it back and get $329 effective profit. If we would want to realize 2/3 of the profit, so let's say around 600, it would need to go to 100 in June, or by December be at 71, for example, or between 63 and 71 and so on. Yeah. So, however, if we really think it will just go up from here, then it obviously offers the benefit that we don't have to worry about not being able to sell something next week because the strike price we are comfortable with would be too far away from the current price. Yeah. Now, looks like that turns into some bigger ABC, which could mean that this here is wave 3 already at the 2318. So basically that whole pattern here is already 5 waves, so that wasn't the wave 3 movement here, in which case then that would apply like this. And however, we would still assume if that is a 5 wave pattern up, then we still would have this here as our lowest point. So because if it were to fall below here, 21.80, the pattern would turn invalid. However, in terms of the correction, it can then go anywhere here, whereas most likely retracement, or very often we would bounce from one of the usual suspects, so 61.8, 38.2 retracements. We'll see how it goes, but I still believe that we are right now for today in a bullish movement. I mean, otherwise I wouldn't have bought the bull call spread options. And so far, or so much about GameStop. Like, I mean, we've covered it now for like 20 minutes. All it remains to do is basically wait. The only thing that would point against it going up, like I think it would be the current maximum pain on the options market. So maximum pain is basically the price where most of the options that have been bought, no matter if it's call option or put options, will expire worthless, and that price is at 21 now. Therefore, the market tends to, but doesn't have to, move towards that price. It will not always do it, but it sometimes tends to do that. Yeah, no, we don't need that anymore. And circle back real quick. So that's here. That one's we have the pending orders for everything. Yeah, so we canceled the rest of those. Oh, there we still have a bull spread open. No. Oh no, it's our sell order. Yeah, I'm mistaken. Yeah, so I was confused for a second. So selling that one for a profit. We also have for our call options pending orders for our put options to buy them back. So we pretty much have everything set here. Yeah. Now, okay. Now let's go through the other positions real quick that we have right now, that I have right now. So first of all, so like I have 3 in quotes gambling positions with like small amounts between 100 or between $50 and $100. CRKN currently at a small loss. We'll see if that actually was the corrective pattern, or actually till here. And if we from here now get a 1, 2, 3, 4, 5 movement up, which would then potentially go at least till here, at which point we would enable a trailing stop. So either we go further and we realize more profit, or we get out of the trade pretty much break even or with a minor profit. Then we have GWAV. Where are you here? Same situation here. Although there actually we are at the point where the pattern became invalid. That's unfortunate. Question is, do I want to just cut my losses here, or I mean, it's really not worth the I'm gonna take a gamble here and hold that, but from an Elliott Wave perspective, the pattern here, the moment we went under this starting point here, the pattern became invalid. So, but considering the small amount, I'm gonna hold on to that. So this is one where I called it wrong. Yeah, so got it wrong here, and we'll see if either it will eventually expire worthless, or we'll get lucky and it recovers. They had unfortunate news, so they announced another reverse split, and that just was not perceived well, understandably. And then Pewdie, there we're currently up. Here we got 20,000 shares for $50 roughly. I believe that we have a wave pattern up here, and that this here is ABC. It's also where we bought on the 50% retracement roughly, which would mean, if I'm right, we would get another move up here. And the first profit target would actually be here. So if it happens, nice. If not, then also not that bad. And with that, we can go or move on and go actually to the next part. And that's looking at what Reddit has to offer. So CISS, I looked already briefly at the things so that we don't have to look them up. I mean, if we zoom out from that thing, it's also another clusterfuck in terms of movement. So it's just going down, brief minor recovery, going down, minor recovery, going down, minor recovery, going down, minor recovery. And it looks like we have the same here going again. So even if we look at a 1 hour chart, one could potentially find some pattern here. 1, 2, 1, 2. So there is a chance that it will move up, but it's also trading above $1. So it means like the capital required, so like just throwing $100 of it will never pay off hugely. And the downside there is much bigger. So that one's going to be a pass, at least for me. Then we have MRNO. So potentially hugely insider own, very small float, short interest, almost nothing. So like I don't think there will be a short squeeze, but MRNO, where are you? There you are. Okay, that one has an interesting pattern. So we had like a sideways movement, drop, up, down, and then from here, theoretically, we could have another push up, but it's kind of hard to see a definitive pattern here. So, and again, the stock trades too high, so I'm not just going to buy 10 shares and hope something sticks. And I'm not willing to throw more capital at it, so that one's also going to be a pass. At least for me, is that. So close that, go back. From saved. That's different. ALLR. That's this one. Trading for 60 cents. So having some positive momentum right now. Okay, it takes a moment to load. Boom, boom, boom. Yeah, could have gotten our bull call spreads cheaper apparently, which means have to wait for it to load. Or let's switch the time frame. So zoom in here. Okay, yeah, here still everything's good, but yeah, I really thought like that we will get the bigger push here, but again, on that small scale, movement might vary a little bit. As long as you stay above the 21.80, the pattern still holds here. If we fall below that, then it might, it would get tricky. But as long as we stay above 21.80, the pattern holds. Question is just if we today will see a little bit of a push up that will get the options into the profit that I need them to be, or at least far enough to sell them at a profit. Now, we wanted to look at ALLR, so there we go. And again, same thing. I mean, you can already see it on the hourly chart. It's just also a huge clusterfuck with occasional movement and huge swings partially. I mean, not that huge here, yeah. But cannot see a pattern here. And with the history of just being, like going down, 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 it's hard to see like a definitive bottom or so where we could say, okay, that's like our worst case scenario where we get out. And same problem here, we would get around like 50 shares, a little bit less than 50 shares, so that even if it moves to $1, the price is just not right. So another pass for me. I do, like, despite having a lot of things where I'm passing on, I do, however, appreciate Reddit for having just so many stocks that get shared that we can consider. So next one would be LPA, actually. That one already took off, but it's interesting to look at. Congratulations on everybody that caught that one, because that's just insane. It was literally a couple days ago at $10, and it's now at 430. Yeah, and there comes another push potentially. Yeah. So from the pattern, if we zoom out, it may be something like 1, 2, 3, 4, or 1, 2, 1, 2, 3, 4, 5, and then it goes down. Obviously, getting in at 600 or whatever, or 500 just is not worth it anymore. I mean, might still be worth it, but it just, no point. I mean, it definitely should, without knowing anything more about the company, just the chart pattern, it definitely should at some point correct, and that correction would then obviously already mean like 30%, 60%, even if it then has another swing up. So definitely not for me. Even if between here the high was 450 and that low here was already at 284. So, I mean, it's almost, that's actually 38.2 probably retracement that we have here, which points that now we have the fifth wave, which might make a new high, probably already did at the 600 mark briefly or so. Like here it still says 430, but the green bar already moved to 600. So, so we'll see how that goes. Actually, we don't, because we're not going to invest in that. So it's already too far off. So no point in wasting the resources of watching it. So that one. MNTS, next one on the list. Already have it here. Yeah, that same issue. So, like, I mean, for all those popular stocks that are shared in the short squeeze subreddit, I really don't want to get into things that are already close to the $1 mark, because it's psychologically, in my opinion, such an important milestone. And if the chart looks like this, then it's hard to see like a bigger upside. I mean, it is potentially possible, of course, so it all depends on a lot of different factors. I think if we look here in the roughest way, it could be something like 1, 2, 3, 4, 5. And now here our ABC movement, and that gives the potential if we would have decided to get in on the 50% retracement or so. But again, we would have gotten what, like 75 shares at best, and then would have hoped for another push to 110. So, like a 20% return or 30% return, it's just not what I'm looking for when I'm looking at those potential squeeze things. So especially those those penny stocks in quotes. Yeah, so that one's also not for me. Yeah, here somebody made a killing with ASTS, so a space thingy that we don't have on the list, surprisingly. ASTS. They should potentially be promising, but the biggest move is already, yeah, there we go. We can see that's wave 1, 2, wave, we can also like just to, for the exercise, if that would be wave 1 and 2 and we would have thought to consider it, then, was it already? Okay, there, so that's the bottom, okay, so then we would expect it to reach, yeah, the 2618 at least. So we even went through the 3618. So that's one of the examples where the yeah, not the rule, but the guideline that we very often bounce from the 618 doesn't perfectly hold. But that's very likely 1, 2, 3, 4, and which means that what we are seeing right now would be wave 5. And if that's wave 5, then we could add an expansion and get the profit target. So the first profit target would be this one. We went through that one. The second one is here. And very likely we have another 1, 2, 3, 4, and then 5 here. So there's like a 10% upside left. And after that, there should be a correction that gets it down again to, yeah, depending on how high we go. Obviously, it could shoot higher, but like overall, if we were to go that high, so reach the $10 mark, we would expect then the correction to go down to 580. So getting in at this price level would make no sense. It might be interesting to check ASTS. There are options for ASTS. The stock is below $10 and the premiums are going to be reasonably high. So yeah, like the one for next week, for example. Okay, the put options here are not really paying. So if we would expect it to drop to 580 at least, potentially as little as 4, we don't really want to have a cash secured put at those levels because we don't really want to hold those shares. We don't want to buy calls right now if we expect it to drop, but we would create alert at $6. So we would maybe, if we see the correction here, that would be the time to then buy call options because they get cheaper. Since it's done in a downwards movement, it becomes likelier to go further down, or the market expectation would be like this. So yeah, but that we can keep an eye on in the near future. And with that, we can also move that. Cloth, whatever that is, CLOF, where are you there, Cloth? Okay, it's already at $1. A similar situation here, 1, 2, potentially 3, 4, 5. Still upside, but the upside is limited. So in the best case, it's another 30, 40%. Whereas in any other case, it might just go down. And even here within that pattern, it may be that that's another 1, 2, 3, 4. So there's like 10% downside potential before it even goes further up. So yeah, here we're too late to the party. Yeah, but again, at 60 cents or so, it's still something where I either would need to do more research to justify the investment, or it's just not a play because yeah, it doesn't get enough shares for $100. So yeah, gotta remove that one as well. Congrats on everyone that got in time. Yeah, that's actually something I saw today, which is not too bad considering to basically short stock or sell or buy put options for insurance companies in the US that cover areas that are now going to be punished with hurricanes, because it would mean that those insurances would have to pay out and therefore be less profitable, and therefore their stock might tank. Yeah, but that's a completely different topic from what we usually do here. Now VSTS, another thing we can look at. Do we already have it? No, surprisingly, yeah, VSTS. So I'm bookmarking so many posts throughout the day. So at $12, okay, yeah, like when was that posted? yesterday. Okay, so after that huge drop here, yeah. And if we look on the monthly, okay, it's not even that old. So in terms of being on the market or data that we have for it, so hourly. Or it's hard to say, like, is there BSTS, are there options for that? So options always mean limited risk for us, yeah. So yeah, there are, but there are no weeklies and the volatility is not that high. So even a cash secured put till November would only pay $70. So 7%, really not worth it in my opinion. So but we might keep an eye on it. So but let's go. We move. I am part of Wall Street Bets. Weird. Maybe I misclicked there. LPA we looked at. That's different. That's different. That's also different stuff. That's also all different stuff. Okay, yeah. With that, we are through. Yeah, that's the funny thing. So just saying buy that stuff. Yeah, nobody's gonna do that. So do we have Holo on our list already? HHH. Put no. Okay. Holo. How does the chart look? So all we care about in the first, yeah, it doesn't look good. In the first check, we care about, can we see a valid Elliott Wave Theory pattern or not? And then after that, we can look at other things, yeah, which we couldn't see here. Now let's circle back to GameStop. And actually, I'm gonna sit down. Sorry for the extra noise from the height adjustable desk. Yeah, so that's how we look right now. We basically touched the 78.6 retracement here, which is fine, or we barely touched it. It would be a 22 by 1 cent. We didn't touch it. Now, I did not foresee that, and obviously could have gotten my bull call spread much cheaper. So if we circle back to GameStop here, and we bought the 24.25, so we bought the for today actually. So we bought the 24 and sold the 25, yeah, this way. Yep. So we can see that now we actually would get them for $9, where we paid 16. I mean, it doesn't really make a huge difference, but if we look into the analysis for that same trade, we can see that the profile for it actually here already. If I just update that, it should update it or not. Yeah, so you can see that the payout profile, risk reward profile changed, so it would now be better. On the other hand, if we, that would have also been an okay play, but it's like 1-to-1 payout, and like when we do, or at least I plan to when I do those option plays, to have a decent payout, so little risk but potential high reward when I'm right. So to achieve a status where I don't have to be right 50% of the time, but I only have to be right maybe 20% of the time for it to be profitable. Either way, that whole option, even if it turns out to not play out like I think it will, cost us then $32.60, so not the end of the world. Less than 1% of the portfolio. So yeah, and I think we have it for today. So one thing we didn't look at, yeah, so that's FFIE. So there I said I have the let's go on daily, the $1 put option, which is currently in quotes underwater. However, we got $50 for it, so currently we would still be able to break even if I would have to buy the stock for $100. And we have the 50-cent put option, which is currently still in profit. So technically, right now, although the expiration is June 21st, so right now we would still be in profit if the price stays where it is. It's going to be interesting to see if this here turns out as an ABC pattern. So we see if that would be AB, then we pretty much nicely turned around on one hand on the 50% retracement. On the other hand, that's also roughly the 100% extension or expansion of wave AB. So it's going to be interesting to see if we bounce from here and go up, which then means by June, the options will both be out of the money and I just pocket the $70 premium. Or if we go further down and eventually I'll get 200 shares of FFIE or not. But that's, I think, the last thing that we haven't covered today. So, oh yeah, and PK is also, sorry, that's also something. There we have I have to check, 70.5 call option that we got for $20. So I think the profile here is worth it. So it's till June. And if we just look at the outcome, it's basically, yeah, like if the stock manages to move above 17.5, considering the $17 that I paid for the option, it has the potential to pay multiples in profit. And however, so far, PK, where are you? There you are. So far, it seems like it's not necessarily want to do that. My assumption was that maybe, let's zoom out a little bit. Yeah, the bigger assumption, yeah, like might have timed that wrong and might want to roll that option to a future expiration. Because if Elliott Wave Theory applies in that stock, then that is either wave 1, 2, or it's wave AB. And if it's wave AB, then potentially we would get at least a wave C up. If it's wave 1, 2, we would get a wave 3 up. And the worst case scenario would be that's actually 1 and that's AB and we get a wave C down. However, even at the end of that wave C, we should still get a move up. But I guess I'll just hold that position. And we anyway have, I think we have an order for PK as well or not, sell PK. No, we don't have an order there because it's a call option and we don't know how much profit we could potentially make. So we're just gonna hold that one. And then depending on how it ends, yeah, it's like $19 loss, definitely doesn't hurt, or it might be a couple hundred plus if there is some upward movement. I think the only thing I could have done better here, instead of taking the June one, take one with a later expiration date, but it would have then also increased the premium, of course. And yeah, now last but not least, many of the options, so for example, the PK call option, I picked them myself, and I have to say I'm happy to have found option strat, because it's really, really cool, because now instead of like thinking about what I want to do, okay, there it doesn't, let's say 100, or instead of having to manually analyze all those options myself, I can literally just tell option strat, I think by July, the price will be like this, and I get the potential options that I can buy or sell, and the potential profit that I get if I'm right. So yeah, it's kind of cool. It also makes it easier to estimate if I can even afford something. So if you, for example, consider Nvidia, where right now before the split happens, so it trades about 1,000 per share. So I definitely cannot, or I would basically risk more than a third of my portfolio with one single option, and I could not sell a cash secured put because it would require more than $100,000 to actually cover the 100 shares. However, I can still, if I'm, for example, have the opinion that, I don't know, it will move 50 points or 500 points or whatever, and I'm willing to risk a certain amount. So I can basically use option strat to faster figure out which strategies for which expiration date I actually, based on my analysis, could afford. And I think that's really one of the coolest tools I've ever seen, especially if you can then, with the click of a button, analyze and visualize it. So how the pattern plays out over time, either as a graph, where you can then see how the line moves over time, or so bigger range, yeah, or as a table. So that one actually wouldn't be too bad, but you can also see actually that one wouldn't be too bad. So it would cost 500, would have a maximum profit of what's the expiration till July? Okay, but we would need a very strong movement for that. So it would need to go below 760 or above 1,400. So yeah, but again, like the general idea is that this thing here is quite powerful in terms of making it possible to figure out suitable strategies. So, and you can just adjust everything like you see. And have an instant update on all the numbers. Anyway, I think that's it for today. We'll see. I mean, I will keep an eye on how GameStop moves because I now have the options there, although we already have the orders to close them if they move in the way we want. Yeah, now, last but not least, we actually have the movement happening that I didn't expect, so that we break here through the 2180, which, okay, then that cannot be a wave up. So then that brings up the question if potentially, yeah, but that 1, 2, 3, 4, 5. So there we have 5 waves up. I mean, the only other option then left would be that somehow is the entire 5-wave pattern, which would be a repetition of the mistake that I made on Tuesday, where I assumed we're already done here and that's the next wave up. What else would be possible? It's possible, I'm assuming this is ABC. It's possible that is somehow ABC, and now we get another push down, but our maximum or the lowest level would be 1717 for that pattern. It's possible that this is 5 waves and not till here, but somehow till here. And then that's now our wave 2, in which case we would expect to bounce from any of those levels here. So yeah, that's like not the downside, but there is a lot of flexibility within Elliott Wave Theory. So it, in the end, applies to every possible, or not every possible, but to pretty much close to every scenario, but which also then leads to, at any given time, there are multiple patterns that might be valid. I pick the one that looks most likely to me, and then sometimes that pattern turns invalid, and then have to adapt. Now, that might mean that today we actually will be graced, or not graced, but experience an ABC movement down, which would then mean that the small bull call options that we bought today will actually expire worthless for an astonishing 32.60 cents loss on those. But the rest of our options are still fine, so the rest is still in order. And yeah, I'll keep an eye on that. However, keep that in mind. So overall, at least that part of the pattern that still seems to hold is that this here appears to be 1, 2, 3, 4, 5. All the way 3 could also potentially be here. And if that's the case, yeah, obviously wave 3 has to be here because that point is higher. Yeah. So, and if that's the case, we would assume that we are right now either wave 2 is finished here. But if we were to fall below 20.10, then wave 2 is not finished, which I consider unlikely, especially since we know that the max pain for today is at $21. And if wave 2 is already finished here, then we are in some kind of upward movement here. But as always, like I say in the beginning of every stream, that is all just my personal opinion and in no way financial or professional advice of any kind. You should always do your own research and so on. Yeah. So yeah, anyway, we're going to end the stream here for today. I think we've covered a lot. It's interesting how certain patterns like played out. A little surprising that we dropped here a little further. I'll keep an eye on that, but I'm still overall bullish. And question just is if we will get to see the movement today that will bring my options into profit again or not, or the bull call options that I bought today. Although even if not, considering that it's way less, that's like 0.3% of my portfolio at risk, so like really not worth losing sleep over. Yeah, anyway, that's it for today. Yeah, see you all in another stream, potentially next Monday. Don't forget, like, subscribe, enable notifications so you get notified when I go live. And yeah, with that, have a great weekend and till next week. Bye-bye.